I'm hemorrhaging expenses, but I'm not sure from where. How do I get to the bottom of this? Your first step is acknowledging. No, your first step is clarity. Now, after that, the question is, well, who is the best person to create clarity, right? I don't know. I know that I'm hemorrhaging, but I don't know from where. So good. Don't stop until you get the answer, because if you're spending a lot and you're investing in the growth of your company, then you're not going to describe that as hemorrhaging. The fact that you've used the term hemorrhaging, I trust, is not just because you're in the medical industry, but also because these disbursements are not desired. They may not be authorized. They may be authorized, but in nature, but more than you really have in mind. So the fact that you've used the word hemorrhaging is really telling. So the question is, who is the best person to figure out where the hemorrhaging is coming from, so then you can figure out what to do about it? There are, in general, two types of experts that can help you figure out where your hemorrhaging is coming from. Those experts are: one, an accountant, hello, or two, a procurement consultant. And we work very differently to accomplish similar ends. In this case, we can both answer the question, I'm hemorrhaging, but from where? And I'll give you some more information now, which can help you pick who is the right person for your company. So first of all, the larger your company and the more accounting personnel you already have in place, the less likely it is that you need an accountant, and the more to answer that question, and the more likely it is that you could be a candidate for a procurement consulting project. And this may seem strange. Why is Jamie talking about this if her company is filled with accountants who like to answer the question, I'm hemorrhaging, but I don't know why? Yes, we answer those questions, but accountants are not necessarily the first place to go. A procurement consultant will analyze your spending at no upfront costs. And what they do, you don't necessarily have to have a set of accounting records. They can do it with bank statements. So even if you don't have your accounting records up to spec, horror, it's okay. We don't judge. You can still work with a procurement consultant and look at bank statements, and if your company also has credit cards, then credit card statements. They can analyze your spending, and then they can tap into their networks and say, you're spending $50,000 a year on paper clips. We know a guy, and we think that we can get your paperclip spending down to 30 grand with no impact on the quality of the paper clips that you get and the quantity of the paper clips that you get. So their fee comes out of that 20 grand savings, and they typically require a fee for a certain period of time, depending on what it is that they're saving money on. So, for example, there are some procurement consultants who have specialties like telecommunications or electricity, paper clips, and other office supplies. And so sometimes they might charge, say, 30 to 50% of the savings, and it might be for a period of 2 years, or it might be in perpetuity. It really depends on what it is. If the procurement consultant has expertise, let's say with electricity, the arrangement, the proposal that they might present to you might say in perpetuity, whereas someone saving you on office supplies might go for a period of 2 years. Obviously, I'm not going to present official terms on behalf of anyone, but if you want to know what the landscape is like, wow, Tom Retta, I am so glad you're on this call. This is amazing. The first question that I got is, I'm hemorrhaging expenses, but I'm not sure from where. How do I get to the bottom of this? And I hadn't yet shared about what an accountant can do. I was just sharing what a procurement consultant can do. Tom, would you like to contribute to this discussion? This is so great. I'm glad you're here. And for everyone joining me on the show, I know there is a 15-second delay between what I say and when you hear it. So we might wait a little bit for Tom to respond. But oh my gosh, that's amazing, because Tom is in the procurement industry. And his company does have a specialty. I think it's in telecommunications. So I'd absolutely love to hear if he has any comments. So that's something that a procurement consultant can do. They're incentivized. They take a variable fee, procurement consultants. So the larger the company, the more you can save. the more likely it is that you can attract a good quality procurement consultant who can really save your company a lot and keep the risk very low, obviously, for your company. An accountant typically is fee for service. There are very few accountants who will take on any kind of engagement for what's called a success fee. We in Tier 1 services, we actually do that from time to time, but our I don't know, policy, I guess, or risk level is that we will take on no more than one such project at a time. And those are always a lot of fun. But we accountants, we like to allocate risk carefully and deliberately and by design. So, and most accountants operate on a fee-for-service basis. So when an accountant creates clarity, we're going to overhaul the records. We're going to make sure that we have all the data, all the information flows. We're going to get the books complete, up to date, and reconciled, and not just on a cash basis, but an accrual basis. The main difference between cash and accrual, accrual basis is your crystal ball. It includes not only the money that's being spent, but the money that's being promised to be spent later. That's payables. And on the income side, it's not just the money that's coming in, it's the money that was promised to you to come in. Those are your receivables. Accrual basis encompasses all of that. And that's why we really view accrual basis accounting as the crystal ball. It's pretty much the closest you're going to get in the business world to having a crystal ball, in addition to banned substances. So, what an accountant will do is set up information flows, gather the information, make sure your records are up to date, complete, reconciled, and categorized consistently. And then at that point, you can run an income statement or a profit and loss. It's called different things depending on your accounting system. And run that on, let's say, a monthly basis and see those columns side by side. Look for patterns, look for trends. Have there been any significant changes? And you don't have to look necessarily monthly. You can look semi-monthly, weekly, quarterly, whatever makes sense for your organization. And look as far back in time as you'd like to go, thinking about your business life cycle, whether it's seasonal and some fluctuations are expected, or if your organization's business model should really be flat throughout the year, but certain things have been changing. The next technique that you'll want to do from an accounting standpoint is run what we call a common size income statement. Vocabulary alert, boop, 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 boop. Common size income statement means you're not just looking at the numbers, you're looking at each number as a percent of gross revenue. So what do we see on an income statement? We see gross revenues. That's everything that, depending if it's cash or accrual, has been paid to your company for income or has been promised to pay, earned by your company in products or services. We see direct costs, otherwise known as cost of goods sold, otherwise known as cost of sales. Those are expenses directly related to income. And we see expenses that don't necessarily have a proportional relationship with income, like rent. Your rent is your rent, regardless of how much income or how little income is coming in this month. Peter, welcome. I'm so glad you're on the call. Thank you so much for joining me. I look forward to your wisdom, insights, answers, and maybe even a question if you have one. We were just talking about how to identify a business that's hemorrhaging expenses. How do we identify the source of that hemorrhage? Oh, thanks, Peter. So we were talking about procurement consultants. We were talking about getting the books up to date, reconciled, and running comparative income statement or profit and loss. And we were just talking about running a common size income statement. And what you can do with that is compare the percentages with other businesses, either in your industry or in your business life cycle stage, and see how much other businesses are spending as compared to their gross revenues in certain main key areas. You don't have to get nitty-gritty like dues and subscriptions, but you really want to organize your chart of accounts. That's the list of all income and expense accounts for purposes of this question. Organize it so you can have all the details that you need to get your aha moments, all the details that you need to make sure that your income taxes can be prepared, but also have them grouped into major categories that you can do a strategic analysis, vocab alert, strategic analysis like a common size income statement. If all of your general and administrative expenses, for example, are grouped into a main category called general and administrative, and all of your sales and marketing expenses like advertising and promotion, website costs, any personnel costs that you might have, or outside expertise, consulting costs related to sales and marketing. If you have all of those detailed expense accounts grouped to a major grouping called dun dun dun, sales and marketing, then you can run a kind of a summary income statement, a high level income statement, and see what is my spending, whether it's on a cash or accrual basis, as compared to gross revenue. And how does that compare with other companies? There you have your aha moments. There you have your, wow, I'm spending 50% of gross revenues on general and administrative, as compared with other companies in my business life cycle or in my industry. That's really high. Maybe that's where I'm hemorrhaging, and maybe we could switch from the deluxe gold coated paper clips to the plain metal paper clips, and maybe we could still somehow live with ourselves, right? It's okay to have these aha moments as an opening for action and say, I'm ready for something more. So you never want to stop spending on something or cut back out of this context of not enough, because that's not going to get you to where you want to go. You want to have this analysis and these aha moments, this insight based on what's the carrot that I have decided is the carrot that's in front of my face now. Is it hitting the $5 million mark now that we've gotten to 1 million? Is it changing our net profitability, our net profit margins from 5% to 7%, or from 10% to 40%? Are there any radical changes that we can make to really boost those percentages, boost that profitability? Whatever it is that you've decided is the carrot, that's what you want more than the gold deluxe paper clips. Maybe there's an innovation that you can make when it comes to your team model. Maybe you want to move from contractors to employees, and here's why. Maybe you want to move from employees to contractors, and here's why. Maybe you want to have a shift in your business model to be much more automated and call on employees or contractors for a high-value specialty service when needed. There are lots of different ways of exploring what to do once you've had your aha moment, but that's my complete answer for I'm hemorrhaging and I'm not sure from where.